Recording in progress.
Hey, good morning, guys, and welcome to today's Bank Nifty analysis. Today is 19th of January, Thursday, and a weekly expiry. One of those days where we can expect some sort of good short covering moves. So let me just quickly switch over to my Bank Nifty chart. Yesterday, what I shared is the 42,500 level is a bit important because that's where a lot of inventory were developed. Second is the 42,000 level, wherein a lot of inventory more from the buyer side, which is nothing but the PE. What you see is yesterday's overall auction is we have got a good single print zone, and the overall balance which is formed above the single print zone. So this is a classic P-shaped profile from the market profile perspective. And this is also known as, short covering. So we had a good short covering, basically clearing the shorts positions, around the 42,500 levels. And, I was looking, if we actually tagged 42,600, which did not happen. Okay. What do I expect today? So one of the things, which we have is with a P shape, we have a prominent point of control. So 42,458 is one of the references or one of the areas where I'll be observing the overall behavior. And if you see, this is a nice curve, a 45-degree angle, so as Jim Dalton shares, we can have a firecracker effect, so if the auction either opens above this or, below this, because there are stops, which are being created. So if you see, there are multiple stops being created above the point of control and, below the point of control. So what the auction or the price is going to do is to clear the stops, hunt for the liquidity areas, and then have some sideways movement, and then we will get some clarity where the auction is heading towards. Okay. But overall, I'm still a bit of one of the areas is another area point of reference is the spike base. So we had a good spike, or the high of the single print, which is 42,322 or 42,300. That's where I'm expecting some sort of responsive buying. And this was the yesterday's open. So these are the areas which I'll be observing the overall behavior. So let me just quickly look at the overall inventory from the options perspective and how they have been positioned. So we still have got good call positions being written down. So what happens is if we open with a gap up, so there are stops here, there are stops here. So 42,700, 42,800 are the areas to observe. And there will be a lot of stops here. So, these are the areas where a lot of short sellers from the call side have already established their position. So what the auction or what the price can do is, if it opens with a gap up, they will be the first ones to be spooked out, and they will be exiting their positions, even though they will be in profits, but they are going to manage the risk. So start observing, so 42,500, 600, 700, 800. So this is that 400, 300 to 400 point range, which so if the auction where goes above and fails, we might again see start positions getting built from 43,000 to 42,500. Yeah. So those are the overall from the inventory positions which I'm seeing. Now, what if the auction opens below the POC or, around the single print zone? So if it opens around the single print zone or below the POC, this might act as a level of resistance, and we should see continuation to the lower side. Failure to see this will give you an overall idea in terms of, so basically, the more call positions will be created, and if there is a continuation, then we should take out the previous day low, that is the Wednesday's low. If it fails to do, then the short positions created or the inventory which is created here, we will have a short covering, and a massive up move can happen towards 43,000. Now, overall, overall, if you see the behavior of the auction, um, uh, you know, uh, we go down, we go up, then we go up, then we again go down, then we go down. Yesterday we had an up. So it's a classic, zigzag move, which is continuously happening over and over again. So don't be bothered around this, because this is classic, how the auction develops and how the price develops. What you have to observe is your key levels. So for me, it's 42,500, 42,300, and 42,700 and 800. This is where a lot of buy stops, or the short sellers, or where the stop losses of the sellers are there. This is the area where the stops of the buyers are there. Yeah. So we'll be looking at, so I'll be looking at the pre-open market data, and to get more clarity. Now, in order to get some more clarity from the inventory perspective, we also have something like, so below 42,300 is where a lot of this is the zone where a lot of sellers are trapped. So 42,000, below 42,300, if the price goes, then we might see some sort of reversal and responsive buying, because these are the areas where the shorts who are trapped, they will be covering their positions, and we can expect some sideways. So if 42,300 to 200, so this 100-point range is a choppy zone, I will be staying away, and I'm expecting a sort of choppiness. But overall, we are getting accepted about 42,400, and the odds are higher that we might open higher. But I'm not in the predicting business. I don't know where the market is going to open. I'll look at the data. If the price is developing as per my understanding, then I'll be taking the trades. Okay. Another area is we have got some buyers inventory. So basically, this is where buyers have already created positions. So 42,450 to 42,400. So this 50-point range, and there are stop losses around this, and also this particular swing low. So overall, if you look at the structure, we are still making higher lows. So this particular low was not broken from the structure perspective. This was broken, by this, and then we are seeing again a continuation higher low. Yeah. So let me see if I zoom out, and where can we expect? Okay. So we also have an area where the buyers were trapped. So if you see, this is the zone where the buyers were trapped, and this is of 16th of January. And what happened is that as soon as the price moved into this zone, we are seeing some sort of rejection. So basically, the buyers here, they are the ones who are exiting their positions. Yeah. So we can have a very dull expiry between 42,500 and 42,300, this 200-point range. So wait for this particular range to be broken, and understand how the price is developing, and based on that, you can start taking the overall decisions. Okay, great. Thank you, and I think I'll catch up tomorrow. Oh, sorry. So tomorrow, Friday, I might not be sharing the video. I'll be back on Monday next week, and yeah, have a safe, and start observing how the price is developing. Yeah. So thank you. Take care, and I'll see you next week. Yeah. Thank you. Bye.